Well, Gautam Trivedi is now joining us. He's managing partner at Nepean Capital LLP. Gautam, great to have you with us here on the program as always. You're back from the US. You've been back. You were attending the Berkshire AGM. You attended the Berkshire AGM, but then, of course, spent some time meeting global asset allocators, investors, etc. there.
Yeah.
So the question really is about the feedback that you got with regards to flows into India, which has been strong. Foreign flows have been strong over the last month and a half or so. Is it likely to continue? What is the mood like?
The mood actually at the margin is starting to get a lot more positive than when I first met a bunch of people in New York when I first arrived. And then I was in New York right at the beginning and at the end of the trip. And I think the mood within that 2.5 week period itself actually underwent a pretty significant change. The good news was that the India-Pakistan conflict really was not on anybody's radar. People, of course, were aware of it, but the fact is the local media didn't, report that much of it. More importantly, it got overshadowed by a bunch of domestic news. The US to China tariff wars that was still ongoing at the time, and other local issues really were more important. So as a result, I think the positivity on India, I think, pretty much continues. Now, with respect specifically to your question on flows, and are we going to see significantly more money coming in? Well, the fact is, we did have a dip within the first quarter in terms of the absolute Nifty 50 and the market as a whole. The good news at the time was that that correction led to India becoming a little bit more reasonable from a valuation perspective. But again, it's climbed back up. So unfortunately, we're not cheap anymore. We were cheap briefly, but we're not that cheap anymore. But I see money coming back into emerging markets for sure. So if I look at one statistic, and that's an important one, foreign ownership of the US equity markets is at a record high of 18%. And given the weakness in the dollar that we're starting to see, I think money is starting to flow out. The first stop usually is Europe, so it's not as if it's all coming to EMs. But increasingly, I'm hearing of allocations coming to EMs, and of course, you will see some of that overflow coming into India.
Yeah, Gautam, hi, great to have you on, and I'm glad you brought that up because that was exactly on my mind. Flows coming into India is one thing, but the other part is what's the sense you picked up speaking to all these people in the US about the US market itself? Because look at the tweet storm, right? I mean, every weekend, every other day.
Yeah.
And I just keep going back to the Apple story as an example. It's not just about, whether the Apple stock is going up or not, but it's the administration today, picking up the phone and telling a listed large public traded company what to do and what not to do. So I don't know, what is the overall sense on US equities, and will there be a greater outflow away from US assets, whether it's bonds or equities? What's the sense you got on that?
Yeah, so it's a good thing you brought up the subject on bonds. And one thing that was clearly evident from the 3 weeks that I was there, that inflation is completely raging. I mean, it is literally out of control. Whether it's eating out, whether it's hotels, everything was sold out. And I'm not just talking of New York City because that's a little deceiving because the rest of America doesn't necessarily mean that what's happening in New York is happening in the rest of the US. But the reality is that we went off to a few national parks like Yellowstone. Hotels are sold out. And this is even when we were 3 weeks ahead of the tourist season actually beginning. So travel is booming. We took 8 flights in the 3 weeks that we were there. Every flight, there was not one seat left. So this Memorial Day weekend, which is ongoing right now in the States, AAA estimates that 45 million Americans will travel 50 miles or more from their home. So that itself is a record high. So I think if you look at overall, I don't see the ability of the Fed to actually cut rates. I mean, that's my personal view, and that's some of the view that was shared by the people that I met. I think that the feedback that's coming in, if you look at the first quarter numbers of the S&P 500, they were blowout. So first quarter net income growth for the S&P 500 was as high as...
We'll just come back to that point, Gautam, just a second, to whether the economy is continuing to boom or not. Okay, let's go back to the conversation with Gautam. Gautam, sorry, we just ran into market opening there, but if you could just complete the point. So from whatever you're describing, it seems as of now the US economy on ground is definitely booming. So I go back to that question. So US equities and bonds, Does the money stay or will it keep looking for other homes? And then we hope one of those homes will be India.
Yeah, I think let me complete the point I was making with respect to the S&P 500's net earnings. So the first quarter net earnings grew as much as 12%. Now on the Max 7, but I would say Max 6 because NVIDIA reports on Wednesday, the 28th. So the Max 6 have reported an average earnings growth of 28%. And the other 493 stocks have actually grown by as much as 9%. So that's exceeded consensus earnings estimates by as high as 16%. So it tells you that the domestic equity market is still going very strong. There are no significant signs as yet of it slowing down. But like I said, any weakness in the dollar will prompt money shifting out of the United States and going offshore. So hopefully we should get a slug of that. And we've seen some of that come through, about $5.5 to $6 billion since the lows in April. So I think there is more momentum for money, valuations notwithstanding.
Okay, all right. Hi, Gautam. Good morning. Good to hear your thoughts as always. Gautam, what's the top theme that you have, as we speak? Because the headline index, it was a little cheapish, but we've had a good 15% run from the recent lows. The pockets of the market still are very interesting, and there are longer runway out there. I think power is something that you liked. Some of those EMS companies in the past we have spoken about as well. What's the one top theme that you could share with us?
I think power remains a multi-decadal theme in India, and it's not just driven by domestic power consumption, i.e., electricity and lighting up homes, lighting up, factories. Also by the fact that at the advent of AI, and I think I may have said this in the past, but a simple Google search, if it takes 1 unit of power consumption, an AI search takes 10x that. So you are invariably going to see a situation in a country like ours where we have 750 million smartphones. Everyone now knows, has an account with OpenAI or with Perplexity or any of the other AI models. So I think consumption of that will significantly go up, or power will significantly go up. The other element that's going to cause the need for power is data centers. And the Indian government is very clear they want to localize the content of Indian citizens in India and not have it sitting somewhere in Palo Alto or Arizona. So given these complexities, I think you will see the consumption, all aspects of the power industry, whether it's generation, whether it's transmission or distribution, having a multi-decadal growth story. So power would be my number one pick as a sector.
Okay, so power, a powerful theme, says Gautam. Got that point. Overall, Gautam, we've discussed the US in great detail. Overall, while you single out power, what about earnings here? Quality of earning. You just told us that, in the US, earnings expectations are getting beaten by 16%.
That's right.
Here, we are struggling to avoid downgrades, though this quarter seems to have been a lot better. We don't have too many earnings casualties. But what's the sense from a growth perspective? Just looking for growth. What could perhaps stand out over the next 6 to 12 months?
So, Surbhi, you raise a fair point that the growth in the States is as high as I discussed, average of 12% for the S&P 500. So if you're an allocator sitting in the US, you think twice about putting money into other markets when your own home market is giving you such stellar results. But having said that, I think there is a need for diversification. So the money will flow into EMs, will flow into India, no question. As far as domestic earnings are concerned, I think, yes, we still haven't gotten out of the dull phase that we've seen over the past about 6 to 7 quarters, where earnings are not able to climb into the double digit. So my view is that we need still more government spending, private sector spending, with the exception of the top maybe 7 to 8 industrial groups. We're not seeing that much spending. Even if you look at the bank's results, Axis Bank loan growth was 8%. HDFC Bank tepid, loan growth of 4%. So 2 of the biggest banks in India are not lending to corporate India, which means corporate India is not necessarily borrowing. And that sort of is a spiral of why we're not seeing that CapEx hit the ground and generate more jobs, generate more production. So, of course, you've seen Kotak Bank, which had a great loan growth of 16%. But then again, corporate side is only 21% of the loan book. So I think we still have to hope and wait that the government spending picks up. a lot of the research reports I've been reading over the past few weeks indicate that that should pick up momentum in the second half of this year.
Okay, all right. Well, with that hope, we wind up the conversation this morning. Gautam, pleasure having you on. Thank you very much, and very interesting insights coming in there from your US trip. Thank you for joining in.